What is up guys, welcome back to the channel. Biden just recently introduced the $2 trillion plan for infrastructure and jobs. $621 billion is planned for transportation infrastructure, which would make a huge investment into roads, railways and bridges with a focus on clean energy. If we go into more detail, $115 billion would pay for fixing roads and bridges, and that includes 20,000 miles of highways and roads, the 10 most economically significant bridges in the US, as well as 10,000 smaller bridges. So with construction in mind, today for a comparison I have picked 3 construction machinery companies. These are Caterpillar, ticker symbol CAT, John Deere, DE, and CNH Industrial, ticker CNHI. In order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, forward price-to-earnings ratio, annual revenue growth, price-to-sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and the dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. First factor are the analysts' price targets. As investors, we want to check how far the current share price is away from the average target of analysts. If the current price is under the average target, we will consider the stock as undervalued, and in the end, the company with share price is furthest away from the average target to the lower side gets a point for this factor. For Caterpillar, we have 19 price targets of analysts. They range from the lows of $125 to the highs of $270 per share. The average is $213.95, and the current share price is at $229.45. So the current price needs to go lower for around 6.8% in order to reach the average target of analysts. For John Deere, we have 17 price targets of analysts. They range from the lows of $236 to the highs of $430 per share. The average is $375.18, and the current share price is at $373.60. So there is around 0.4% room for the current price to reach the average target of analysts. CNH Industrial has 9 price targets of analysts. They range from the lows of $14 to the highs of $19 per share. The average is at $17.20, and the current share price is at $15.74. So there is around 9.3% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with the highest percentage, CNH Industrial gets the first point. Second factor is the forward price-to-earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. That is the standard price-to-earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price-to-earnings ratio gets a point for this factor. For Caterpillar, the forward price-to-earnings is at 21.63. Forward price-to-earnings for John Deere is at 20.5, and CNH Industrial has a forward PE of 16.23. Forward price-to-earnings ratios are in the table, and with the lowest value, CNH Industrial gets the second point. Third factor is the annual revenue growth. As investors, we want to check if the revenues of a company are on a steady increase. We will take a look into the revenues of the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, it will be considered as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. We have annual revenues for Caterpillar, and going into 2018 there was an increase to $54 billion, then into 2019 we had a decrease to $53 billion, and into 2020 there was another decrease to $41 billion. So with one increase and 2 decreases in annual revenues, we have a sum of 1. Revenues for Deere, and going into 2018 there was an increase to $37 billion, then into 2019 there was another increase to $39 billion, and going into 2020 we had a decrease to $35 billion. So with 2 increases and 1 decrease in annual revenues, we have a sum of 2. Annual revenues for CNH, and going into 2018 there was an increase to $29 billion, then into 2019 we had a decrease to $28 billion, and going into 2020 there was another decrease to $26 billion. So with 1 increase and 2 decreases in annual revenues, we have a sum of 1. Results for the annual revenue growth factor are in the table, and with a sum of 2, John Deere gets the first point. Fourth factor is the price to sales ratio. It is calculated by taking the market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and with a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. For Caterpillar, the price to sales is at exactly 3. Price to sales for John Deere is at 3.17. And CNH Industrial has a price to sales of 0.82. Price to sales ratios are in the table, and with the lowest value, CNH gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. For Caterpillar, the return on equity is at 20.01%. Return on equity for Deere is at 26.58%. And CNH has a return on equity of minus 7.83%. Return on equity percentages are in the table, and with the highest one, Deere gets the second point. Sixth factor is the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for Caterpillar, and Q1 of 2020 missed expectations, Q2 beat, Q3 beat expectations, and Q4 beat. So with 3 beats and 1 miss in earnings, we have a sum of 3. Earnings for Deere, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 4 beats in quarterly earnings, we have a sum of 4. Earnings for CNH Industrial, and Q1 of 2020 missed expectations, Q2 beat, Q3 beat expectations, and Q4 beat. So with 3 beats and 1 miss in earnings, we have a sum of 3. Results for the last 4 quarterly earnings factor are in the table, and with a sum of 4, Deere gets another point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to check if the company is able to cover its debts with assets, but also if they're actually being leveraged. So in the end, the stock with the highest current ratio between 1.5 and 3 gets a point for this factor. For Caterpillar, the current ratio is at 1.53. Current ratio for Deere is at 2.42, and CNH has a current ratio of 1.61. Current ratios are in the table, and with the highest value under 3, John Deere gets another point. Last factor we are taking into account is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high yield shows that profits are shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the stock with the highest dividend yield gets a point for this factor. Caterpillar pays an annual dividend of $4.12 per share, which is a dividend yield of 1.79%. John Deere has an annual dividend of $3.60 per share, which is a yield of 0.96%. And for CNH, the annual dividend is 13 cents per share, which is a yield of 0.84%. Dividend yields are in the table, and with the highest percentage, Caterpillar gets the first point. We can calculate the results, so Caterpillar has 1 point, John Deere 4, and CNH Industrial 3. This means that with 4 points, Deere is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there's a question for you: which stocks are you picking for the Biden's infrastructure plan? Share your suggestions in a comment below. If you are interested to know exactly when I buy or sell any stock, then consider the options on Patreon. This week I already did comparisons on electric utility companies, including Dominion Energy, DTE, Consolidated Edison, NextEra Energy, Duke Energy, and Southern Company. If you are interested in any of those, then click on the video currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.